MCOM Semester 4, University of Mumbai. Subject Corporate Financial Accounting. Question Bank Solution. Topic MCQs Part 6. Fair value is the dash of intrinsic value and yield value. Option A average, option B total, option C net, option D difference. The correct answer is option A average. Fair value is the average of intrinsic value and yield value. PV ratio is a relationship between dash and dash. Option A market price and earning per ratio. Option B net profit divided by earning per share. Option C gross profit divided by earning per share. Option D loss divided by earning per share. The correct answer is option A market price divided by earning per share. Yield value is based on the assumption that option A revenue realization, option B going concern, option D prudence, option D cost concern. The correct answer is option B going concern. Yield value is based on the assumption going concern. 130 MCQ under annuity basis goodwill is calculated by option A number of year purchase multiplied with the average profit, option B number of year purchase multiplied with super profit, option D summation of the discounted value of expected future benefit, option D super profit divided by expected rate of return. The correct answer is option C summations of the discounted value of expected future benefit. Yield basic valuation of share may take the form of valuation based on rate of return and dash. Option A inflation factor, option B productive factor, option C risk-free factor, option D beta factor. The correct answer is option B productivity factor. Yield-based valuation of share may take the form of valuation based on rate of return and productivity factor. If the intrinsic value of the share of common stock is less than its market value, which of the following is the most reasonable conclusion? Option A stock has a low level of risk, option B stock of a high dividend payout ratio, option C the market is undervaluing the stock, option D the market is overvaluing the stock. The correct answer is option D the market is overvaluing the stock. If the intrinsic value of the share of common stock is less than its market value, which of the following is most reasonable conclusion? The conclusion is the market value is overvaluing the stock. Which of the following accounting standard deals with intangible asset? Option A Indian Standard Accounting Standard 22, option B Accounting Standard 24, option D Accounting Standard 26, option D Accounting Standard 28. Accounting Standard 26 deals with the intangible asset. Accounting Standard 26 deals with the intangible asset. MCQ number 134. The profit of last 5 years are rupees 80,000, 65,500, rupees 52,500, rupees 75,000 and rupees 80,000. Find the value of goodwill if the calculated on average profit of last 5 years on the basis of 3 years of purchase. So how you are going to calculate this? First find out the average profit, that is you have to add all the 5-year profit 80,000 plus 65,500, 52,500 plus 75,000 plus 80,000 divided by 5 years, because this is the profit of last 5 years. You are going to get the value 71,000. Then what you have to find out? Goodwill. So average profit now you got is 71,000. Into you have to do the number of year of purchase. So number of year of purchase is given 3. Okay, so average profit of last year on the basis of 3 years of purchase. So number of year of purchase is 3. So 71,000 into 3, you will get your answer 2,13,000. So answer for MCQ number 134 is 2,13,000. Find the goodwill of a company from the following information. Total capital employed rupees 8 lakh, reasonable rate of return 15%, profit for the year rupees 12 lakh, use capitalized method. Okay, so you have to find out the goodwill of the company from the following entry. So FMP, that is your average profit, is how much? 12 lakhs. Okay, profit for the year is 12 lakhs. Then you have NRR, that is normal rate of return. It is given reasonable rate of return, that is your normal rate of return, equals to 50%. Then capital employed is 8 lakh. So you will write the formula FMP capitalize into 100 divided by NRR into FMP. Okay, so your 100 divided by NRR is 15 into 1 lakh 1 lakh 20 yeah 12 lakhs. It is 12 lakhs. So FMP is a 12 lakh. 100 divided by 15 into 12 lakhs. You will get your answer as 88 lakhs. You will get your answer as 8 lakhs. Then sorry, you will get your answer as 80 lakhs. Okay, 80 lakh will be your answer. Then the formula of goodwill is FMP capitalized minus capital employed. FMP capitalized minus capital employed. So FMP what we have got is 80 lakh minus capital employed is 8 lakh. It is given in the problem sum. So your answer will be 72 lakhs. So you are using this formula, you will get your answer 72 lakhs. Next, the average profit of the firm is rupees 1,20,000. The rate of capitalization is 12%. Asset and liability of the company are rupees 10 lakh and rupees 4,25,000 respectively. Calculate valuation of goodwill. Okay, so how you are going to calculate? First, you will find the calculation of goodwill under capitalized basis. Capital employed. Okay, so under capitalized basis you are going to, so capital employed is how much? Asset minus liability. So asset how much it is giving? 10 lakhs minus 4,25,000. So your capital employed is 5,75,000. Then you will find the normal value of business. Then you will find normal value of business equals to average profit divided by capitalization rate. So average profit you given here is 1,20,000. Okay, so you will put 1,20,000 divided by capitalized rate given in the problem sum is 12%. So you will divide it by 12%. So answer what you are going to get as a normal value of business is 10 lakh. Okay, then you will find out the goodwill. So goodwill is equal to normal value of a business minus capital employed. So normal value of the business you got 10 lakh minus capital employed. We have calculated here, that is asset minus liabilities, it's 5,75,000. So normal value 10 lakh minus capital employed 5,75,000. So goodwill amount is 4,25,000. So your correct answer for 136 is 4,25,000. Okay, so just remember the formula. Normal value of business is average profit divided by capitalized rate. Okay, and the goodwill is normal value of a business minus capital employed. Okay, the next sum, problem sum number 137. So find the goodwill from the following information. Capital employed 8,25,000. Rate of normal return 10%. Future maintainable profit is 1,50,000. Annual factor is 1.70. Okay, so your FMP here is, okay, that is average profit is 1,50,000. NRR, that is normal rate of return 10%. Capital employed is 8,25,000. Then average profit equals to capital employed into NRR divided by 100. Okay, this is your formula. Average profit equals to capital employed into NRR divided by 100. So capital employed here is 8,25,000 into 10 divided by 100. So your answer will be 82,500. Okay, your answer is 82,500. Then super profit is FMP minus AP. Super profit equals to FMP minus AP. 1,50,000 minus average profit, that is 82,500, equals to, you will get the answer 67,500. So your super profit is 67,500. Now goodwill. Now goodwill equals to super profit into annuity factor, which is given in the problem sum. Okay, so 67,500 super profit into 317, you will get your answer 2,13,975 will be your goodwill. Okay, so answer will be 2,30,975. So here you have to just remember the formula that first you have to find out your average profit, which is given in the sum. Normal rate of return, it is 10%. Capital employed 82,500, yeah, 8,25,000 given in the problem sum. Average profit formula, you will put it as capital employed into NRR into 100, so you will get 82,500. Super profit is FMP minus average profit, you will get 67,500. Goodwill, super profit into annuity profit, that is 67,500 into 3.17, you will get your answer 2 lakhs 31 21 sorry 2,13,975. Okay, then MCQ 138, future value of the asset is uncertain. Option B certain, option C predictable, option D constant. The correct answer is option A uncertain. Future value of asset is uncertain. If price of sales ratio method of valuation of business, market price is divided by market value, option B book value, option C sales value, option D face value. The correct answer is option C sales value. In price of sales ratio method of valuation of business, market price is divided by sales value. The detail of Balaji Limited is as follow. Earning after tax rupees 1 lakh, number of equity share 50,000, rupees 10 each, and market price per share is 10. Calculate PE ratio. Okay, so formula for PV ratio is what? Market price per share divided by earning per share. Okay, so market price we know it's 10 rupees 10 for each share, but we don't know the earning per share. So formula for earning per share is earning after tax divided by number of equity share. So your earning after tax is given 1 lakh, number of equity share is 50,000. So 1 lakh divided by 50,000, you will get earning per share as rupees 2. So putting this value in your PV ratio formula, earning per share is 2. You will get 10 divided by 2, answer will be 5. So your PV ratio is 5. That is option number B, 5. One of the following is not a classification of goodwill on the basis of nature of animal. Option A dog goodwill, option B cat goodwill, option C rat goodwill, option D lion goodwill. The correct answer is option D, lion goodwill. Weighted average method of calculating goodwill is used when option A profit are not equal, option B profit show a trend, option C profit are fluctuating, option D profit are equal. The correct answer is option B, profit show a trend. Weighted average method of calculating goodwill is used when profit show a trend. Okay, so weighted average method of calculating goodwill is used when profit show a trend. Next, 143 MCQ. The profit of the last 3 years is 80,000, 40,000, 60,000. Value of the goodwill for 2 years of purchase of average profit. Very simple. You just have to add your average profit divided by 3. Okay, so add last 3 year profit. You have a 3 years, so divide it by 3 years. So you will get your answer as a 6 lakhs. Then goodwill is average profit into number of purchase years. Okay, so average profit is 6 lakhs into 2. So your answer will be 1,20,000. So your value of the goodwill is 1,20,000. The asset of the firm are 7,50,000 excluding goodwill, and liabilities are 2,50,000. The profit for the last 3 years were 31st March 2020 68,000, 31st March 2021 82,000, 31st March 2020 it's 90,000. Normal rate of return is 10%. You are required to find out the value of goodwill on the basis of capitalization of super profit. Value of the goodwill of the firm Okay, so here the formula for formula or calculation format is, first you have to find out the average future maintainable profit, that is your average profit. So you have in the sum it is given the um, profit from 2020 till 2022 for 3 years it is given. So we'll add up 68,000 plus 82,000 plus 90,000 divided by 3, that is 2,40,000 divided by 3, you will get 80,000, that is future maintainable profit is 80,000. Then normal rate of return given is 10%. Capital employed is asset minus liability. So in asset they are given 7,50,000 and liability is 2,50,000. So you will get your answer 5 lakh. Then FMP capitalized equals to 100 divided by NRR into FMP. Okay, FMP capitalized as 100 divided by NRR into FMP, that is 100 into 10 into 80,000. Okay, so uh, you will get your answer as 8 lakhs. Okay, your answer will be 8 lakhs. Then value of the goodwill is, you have to minus FMP minus capital employed. Okay, value of the goodwill is FMP minus capital employed, that is 8 lakh minus 5 lakh. 8 lakh minus 5 lakh equal to 3 lakhs. So average profit of the firm is rupees 1,50,000. Total tangible asset in the firm are rupees 12 lakhs and outstanding liability are rupees 7 lakh. In the same type of business, the normal rate of return is 20%. Calculate the value of goodwill of the firm by capitalization of super profit method. Okay, so we have to find out the value of goodwill by using a capitalize or super profit method. So your FMP, that is your average profit, is 1,50,000. It is given in the sum. Then you have NRR as 20%. Then you have tangible asset 12 lakhs and liability 7 lakh. So your capital employed is 12 lakh minus 7 lakh, 5 lakh. Then you will find a FMP capitalized equals to 100 divided by NRR into FMP. Okay, so equals to 100 divided by NRR is what? 20 into 1,50,000. So you will get your answer 7,50,000. So goodwill is FMP minus capital employed. FMP what you have got is 7,50,000 minus 5,000, so 2,50,000. So your correct answer is 2,50,000. So value of goodwill is 2,50,000. 146. The share appear at dash in the balance sheet of the company. Option A, paid up value. Option B, market price. Option C, adjusted market value. Option D, authorized value. The correct answer is option A, paid up value. The share appears at paid up value in the balance sheet of a company. AS21 deals with option A, amalgamation, option B, cash flow statement, option C, consolidated financial statement, option D, accounting for price level changes. The correct answer is option C, consolidated financial statement. AS21 deals with consolidated financial statement. Shareholder who refuse to sell their share to the transferee company under the terms of amalgamation is known as assenting shareholder, option D, dissenting shareholder, option C, contributors, option D, minority shareholder. The correct answer is option B, dissenting shareholder. A new company is formed to take the asset and liability of old company in the case of absorption. Any payment of preference shareholder in excess of paid up value of preference share is debited to capital account, option B, preference shareholder account, option C, realization account, option D, security premium account. Correct answer is option C, realization account. For next part, please click for subscribing and click on notification bell icon. Thank you.